So, as if Fed news wasn't enough, now we have to pay attention to people monkeying with trades. Have I even explained what we're talking about yet? Okay, so we're going to talk about market manipulation, but we aren't going to explore all of the darkest corners here. People have strongly held opinions about the effect of trading manipulation on the price of metals, so I'm going to try to stay in the center lane here, and I'm going to talk about what we know is happening. Maybe I can even pull this off without getting called mean names. So we know that price manipulation is happening in precious metals markets. That's not even the question. We know for a fact there was extensive manipulation between 2008 and 2016. Banks have been fined more than $1 billion for unlawful trading in the futures contracts markets, and the U.S. Justice Department is currently trying 3 people involved with those trades. The charges include racketeering and conspiracy, and those are big criminal charges, and the prosecution cites tens of thousands of trades. So there's just no question that it's happened. Digital trading has made this kind of thing easy, even though Dodd-Frank made this illegal in 2010. So the way that spoofing works is that a trader puts in a very large order to buy above the current price for whatever metal he's trading in. And that order creates fake demand, and that inflates the price. And then the trader turns around, they put in a sell order to take advantage of that higher price. So they sell when the price is higher than it was prior to that spoofed order. And they can do the opposite here too. They can press the price down to put in a buy order, but in either case, once the real order is filled, then the other is canceled. Or in certain cases, maybe it's just never filled. But the shady trader's actual order hits the ledger, and then that would cancel out the original effect of the spoofed order. Pretty simple, pretty straightforward, and it's a little surprising that it went on as long as it did. So now the $1 billion in fines, the current criminal charges, those are being cited as proof that manipulation is happening, or at least that it has happened. That part appears to be a simple fact at this point, but the ongoing impact of those spoof orders, that's a little bit harder to quantify. They would have had short-term effect on price for sure. They might have even had an impact on market sentiment going out a little bit further, but it's hard to say that those trading desks have had a lasting effect on the price of metals over the long term, especially if you consider that right now no trader is going to try to spoof an order while 3 other traders are currently on trial for doing that exact same thing. So if you look beyond the spoof orders, that particular model of market manipulation, there might be more going on, but I don't know that there's any kind of evidence to support it. Now, I'd say that an example of manipulating a market without placing spoof orders can be seen in other markets for sure. If you look at the crypto market, you'll see large-scale trading activity going on with Bitcoin that influences the market as a whole. So a common example would be that somebody with a huge position sells, or more likely it's coordinated and multiple somebodies sell, and that causes all the smaller fish, all the small retail investors to start to sell as well because they think something's going on. And then all that selling drives the price down. And then the whales rebuy at the lower price, and all of a sudden the price is on its way back up. Now, I don't have any actual hard evidence to support the fact that that's happening either, but it seems pretty clear. If you look up whale games on some of the crypto channels, I'm sure they'll show lots of evidence to support this idea. Now, I don't know that we see large coordinated liquidation events that are meant to drive down the price of gold at this point, but I think that that is another good example of how markets can be manipulated. When trading is done digitally, it is just easier. And if the object that's being traded is a derivative, and that's not even fully allocated by the physical metal, it's even easier yet. So I do think that there's a little bit of this in play, but what is happening with gold right now, the prices in particular, I think is a lot more about overall sentiment than it is about ongoing manipulation. Like I said earlier, if you want to push the price down to take advantage of a better price, that could really only be done temporarily. Nobody would have the liquidity to continually place sell orders. So the current market cap for gold is $11.4 trillion, give or take, depending on the day. Now, it's very difficult to manipulate a market of that size. There are very few entities who could do it. You're looking at giant banks, you're looking at regional banks, and you're looking at central banks, so governments. But if it's happening on the market, you'd see it on the ledger. It just isn't really something that's going to be happening. But as you get to the smaller markets, more people could affect the price more easily. So if you look at silver with a market cap is $1 trillion, it's a little bit harder to say that that's not being manipulated because moving that market is more than 10 times easier than moving the gold market. And maybe easier is the wrong word, but it takes less liquidity to do it. Silver is an entirely different use case than gold, though, and any potential market manipulation has different forces in place. Central banks, they see gold and silver very differently, and silver then has an industrial use that regulates the price. More than 50% of silver's demand comes from industrial use. So you compare that to about 10% for gold, I think that's debatable, but if silver gets too expensive to use for manufacturing, then the demand goes down, and that pulls the price with it. And that makes it hard to affect the price over long periods of time, at least from a trading desk. So realistically, the big impacts on metals tend to be black swan events, the kinds of things that people just aren't expecting. 2020 pandemic, Russia's invasion in February of this year. Beyond those events, though, it tends to be more about where investors are focused, how much risk they're trying to hedge against. So the point in this video was just to take a look at manipulation and whether or not it's happening. I don't think that there's any real question there. But it's also to look at whether or not there's a lasting effect on price from that manipulation, something holding the price of metals down, preventing them from going to the moon, like a lot of people have been calling for. Now remember people talking about $500 silver and $15,000 gold in late 2020 and thinking that those people hadn't been around the metals long enough really to be taken seriously. Now I know at least a few of them now are throwing the manipulation term around as the reason that the prices haven't gone there. And that's not really meant as a jab at anyone as much as it's maybe just a guess at why we hear about the manipulation topic so much. It could just be that people are looking for cover on why they were so wrong with their predictions. The constructive angle here, I think, is to consider whether or not that you think whatever has been driving metals prices for good or for bad is going to change dramatically anytime soon. So I guess you ask yourself if you think that the fines against JP Morgan and others from a few years ago will do it, or the criminal case that's going on now. My thought is that those changes have probably already played out. And then Basel III, that's another idea that gets thrown around. Basel laws are not new. They've been tightening regulations for years, and I don't think that the final push into Basel III will change the way that metals are traded enough to affect prices personally. You can form your own opinion there, but I would say that whatever is influencing prices today will continue to do so. I think that it makes sense to buy around likely outcomes, and the most likely outcome is that metal prices will continue to move slowly unless there's a black swan event, and those do seem to be getting a little bit more common these days. Okay, so let's call it good there. Let us know in the comments what you think about metals manipulation. Do you think that it's a big contributor to price? Let us know. And then while you're in the comments, be sure to hit the like button if you found any of this interesting, and make sure you're subscribed with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.